Hey everybody, Smart Silver Stacker here. Hope you're doing well. So a lot to talk about today. The global economy is unraveling before our very eyes. The economic crisis is deepening, and tomorrow some very big tariffs are going to be imposed on the world's second largest economy by the United States, the consequences of which still remain uncertain, but they could be very dire. And I will say this about gold and silver: there has never been, in my memory, a better time to have some physical, tangible, safe haven assets in your possession, and I suspect that a large number of investors are going to reach that same conclusion very soon. So again, we got a lot to talk about today. Let's get to it.
The worst day on Wall Street since the crash of 1987.
We're now down 43%.
This could be the most serious recession in decades.
Protect your retirement with gold and silver IRAs. Learn more at sdbullion.com/IRA. All right, so where to begin? Well, global stock markets this week have continued the collapse that began last week following Donald Trump's announcement of a much more aggressive than expected tariff policy. Just to give you a quick recap, because this is the first video I've put out this week. On Monday, there were circuit breakers triggered in Japan, South Korea, and Taiwan, a massive sell-off across those countries' stock markets. Trading had to be halted, and the only thing that really allowed the U.S. to avoid the same fate was a bogus rumor which began on X regarding a potential 90-day hiatus on tariffs. Now, this actually had a major effect on U.S. stock market indexes, which rallied as this rumor spread across social media and throughout some traditional news outlets, until the White House actually was forced to come out and deny these rumors. Now, this fact, the fact that this rumor and these headlines are having a major impact on the way the stock market is trading, I think really shows the nature of exactly what is occurring here. It demonstrates it very clearly, and that is that there is a huge amount of uncertainty at the moment, and everything going on right now is being driven by emotions and headlines and fear, and in some cases greed. The greed part played out today when there was this, I guess it's not a tweet, a message put out by Donald Trump on Truth Social, in which he discussed negotiations with South Korea. And that is sort of the positive narrative coming out of the Trump administration right now, is that because of the hardball that Trump is playing with tariffs, these countries are being brought to the negotiation table. And specifically, this bit down here, he said China also wants to make a deal badly, but they don't know how to get it started. We are waiting for their call. It will happen. God bless the USA. Now back to this chart here of the NASDAQ. And I want to focus just on the NASDAQ as the primary stock market index here, because it is the one that is, if you ask me, the most overvalued at this point, and it has been the one that has been driving much of the rally over the past several years to the astronomical heights that these paper stock markets have reached. But you can see this peak here. This represents this morning's open, so it's Tuesday, April 8th, and this index was up significantly, primarily driven by a tweet or a message by the president on social media. And you can see this spike here. This is the spike driven on Monday by that rumor of a hiatus with the tariff. So rumors abound, and that is the only thing driving price action here, and possibly the only thing averting a major crisis is these attempts at cheerleading by administration officials and whoever created that rumor on X. And feel free to leave me a comment down below if you have some thoughts on who might have been responsible for that rumor. But in fact, there will be no hiatus when it comes to the tariffs. The tariffs are kicking off tomorrow in a very big way, tomorrow being Wednesday. Right now, oil is down 4%. Crude oil WTI spot trading around $57.24. Very negative impact on crude oil. Fears of a global recession in light of these tariffs are accelerating And we're going to get to the metals here in just a moment, so don't worry, we will talk about that. But I mean, this is all predicated on these tariffs, so we need to discuss this first. The U.S. will impose a 104% tariff on China beginning Wednesday. That was from a White House official in a Tuesday briefing. That adds 50% more to existing tariffs because Beijing has failed to lift its retaliatory tariffs that it placed on U.S. goods following last week's announcement. So April 9th could be the day that we really start to see this stuff fall apart. Now, that doesn't mean we can't see some counter-trend rallies, right? Like we saw this morning. The NASDAQ was up significantly. I think at the height it was up almost 4%. But how did it finish up the day? Well, it finished in the red, and overnight futures are down as well. So in a collapse like this of paper markets, there will be these very volatile counter-trend rallies, and it might be a good opportunity to pick up some downside protection. You can pick up some puts. I mentioned in a video back in mid-March, actually, that I had picked up some puts on the QQQ. Now, this isn't financial advice, and trading options entails significant risk, but I was able to close those out at the open on Monday for a significant profit. And on the rally this morning, I did re-enter a short position in that QQQ. That's an ETF that tracks the NASDAQ. That's neither here nor there. I'm not advising anybody to do that. I'm just letting you know how I feel about these markets, and that is that there is still a lot of downside risk here, and that will have an impact on the metals. Now, moving over to the chart of gold here, you can see that gold briefly dipped below $3,000 on Monday, along with that sell-off in the stock market. However, as of this evening, the gold spot price has risen back above $3,000. And this shows a remarkable resilience in the gold price, as it wasn't until Friday, the 14th of March, so less than a month ago, that gold traded above $3,000 for the first time in history. So sure, some gold has sold off with the crashing paper markets, but gold has really held up rather well. Now, moving over to silver, it's a bit of a different story. If we zoom this out a little bit, you can see this trend channel that silver was rising within during the bull market that kicked off in 2024, in early 2024. This here is March 2024, when the bull market really began. Now, at that time, actually, if you go back to February of 2024, you see silver was trading under 23 bucks. So we're still up significantly from that time. However, silver's capitulation and fall below the trend channel here from a technical standpoint is perhaps a little bit concerning. And until we get a close back above this blue line, I would say that there is still a significant amount of risk here in the silver price. However, any major dips I would view as a buying opportunity. So on Friday, I picked up some more 90% junk silver when silver was here under 29 bucks. It's recovered a little bit since then, but if we do get a major plunge down, I will be picking up some more, because this is a risk that I see playing out here, and that is that if a resolution with China is not reached, and if this trade war continues to accelerate, and all signs point that it very well may be the case, there is going to be a huge amount of economic pain here, and there's a few things that are going to affect the metals. One, the Federal Reserve, regardless of what Powell says about worrying about inflation, if things get ugly enough in the paper markets, the Fed is going to come out here and they are going to unleash a deluge of paper money to prop up the economy and to prop up this market. They're not going to allow the whole system to collapse without attempting an intervention. I mean, every indication is that they will favor economic stability over fighting inflation. And there's going to be a lot of political pressure on them from the president to do so. He has already mentioned multiple times that now would be the perfect time for the Federal Reserve to cut rates. And it will be, in my opinion, a lot more than rate cuts that we have to deal with from the Federal Reserve if this trade war gets really ugly and the economic collapse that we are witnessing continues. They are going to return to QE. They're going to monetize large amounts of debt. I think that is very likely in our future. Also, the paper price of silver may rise. I mean, it may, due to the effects of a trade war and disrupted supply chains, right? The U.S. imports a lot of silver. Where do we get silver from? We primarily import it from Mexico and Canada, two countries which are also in the tariff crosshair. It's possible we may even drive those countries into the camp of China as a result of this trade war that we have seemingly declared around the world, and therefore the paper price within the U.S. of silver may rise. But even if it doesn't, even if the silver price collapses on paper, in a environment of economic chaos and potential collapse, the premiums for physical silver, I envision those rising drastically, potentially even to the point that the paper price becomes somewhat meaningless for stackers, because let's say the paper price collapses to $15, but a silver eagle is selling for $50 to $60, then who really cares about the spot price? And the reason that may happen is because investors will be looking for any kind of safe haven. And I suspect that U.S. Treasuries, which have traditionally fulfilled that role of a safe haven in a time of crisis, may begin to look a little bit less appealing. I mean, what do you want? Do you want gold and silver physical bullion that you can hold in your hand that has never gone to zero? Gold, which has held up remarkably well in light of this sell-off. The physical metal that you can hold in your hand. Or do you want the IOUs denominated in a fiat currency from a bankrupt empire, $37 trillion in debt, which is firing up the printing presses again? I think that investors may do the math on that and decide that they want physical bullion. And if that's the case, there's really a very small amount of physical retail bullion products around, the silver bars, the silver coins, the silver rounds, and therefore it's like a game of musical chairs. If a lot of investors try to squeeze into the available supply of physical metal, then the premiums may soar and paper price may become irrelevant. It's just something that I think could play out in the event of this economic crisis worsening. And again, all signs point towards a deepening trade war here. In fact, China has vowed to fight Trump's tariff war to the end. This is from earlier today from CBS News, 8:14 p.m., April 8th, 2025. The Chinese government has blasted the U.S. trade war as unilateral bullying, and they say that the countermeasures China has taken are aimed at safeguarding its sovereignty, security, and development interests and maintaining the normal international trade order. They are completely legitimate. The U.S. threat to escalate tariffs on China is a mistake on top of a mistake, and once again exposes the blackmailing nature of the U.S. China will never accept this. If the U.S. insists on its own way, China will fight to the end. Regardless of your view on this trade war and whether the tariffs are an appropriate policy or not, it's clear that the Chinese have no intent of capitulating here the way that Trump has suggested they might. At least that's my take on it. And therefore, I think that it would be wise, not financial advice, but if you don't already hold some physical, tangible assets outside of this paper casino, monopoly money, stock market, and financial system, it might be wise to hold some physical assets. But leave me a comment down below to let me know what you think. If you enjoyed this video, check out the one that's popping up on your screen now. Thanks for watching, everybody. Stay safe and happy stacking. I'll catch you next time. Smart Silver Stacker out.